typical question. Financial accounting. Financial accounting, first question. Stresses accounting concepts and procedures that are relevant to preparing reports for internal uses in accounting information. Why? Because financial accounting is external. And if you read that in your book right here, it tells you it's external. Internal is managerial accounting. A thoughtful understanding of managerial accounting is essential to be an effective manager. Yeah, you should know it, right? You sit there, no, I don't want to know anything. I'm just going to be an effective manager, and I have no idea what if anything. That's a given, right? That kind of hear budgets. I don't have a budget. I got a question on a budget. Well, it's in your book. Budgets can be useful to communicate a company's goal to employees. Make sure you look up the word budget. The answer's true. Managerial accounting is directed at internal users of accounting information. True or false? It is internal, yeah. Managerial accounting may present more detailed information than financial accounting. Yeah, you could put anything you wanted in it. So if you read that section where it says managerial accounting, that's word for word in that paragraph. You could produce as detailed as you want because it's all internal. Here's a question. Wilson Company managers investigate departures from a budget that appears to be significant. Which principle is being followed? Wilson Company managers investigates a departure from a budget that appears to be significant. Which principle is followed? Management by exception, incremental analysis, you get what you measure, small amounts do not matter. Let's to the last answer. Small amounts do not matter. Wilson Company manager investigates departure from a budget that appears to be significant. Well, if the departure is significant, how could the answer be small amounts? Okay. You get what you measure. Read that section. Read management by exception. Put that on your sheet here. Read management by exception.
Management by exception.
Yes. The financial plans prepared by managerial accountants are referred to. The financial plans prepared by managerial accountants are referred to. Who are they referred to? Corporate, the controller's opinion, budgets, financial statements, are they treasury reports? Financial plans prepared by managerial accountants are referred to as controller's opinion, budgets, financial statements, treasurer's report. Remember I told you to read budgets?
So the budget? Let's read a lot.
Okay, sunk cost is a cost.
Obviously.
Sunk cost is a cost. Don't I have sunk cost on here? Next question, opportunity costs are.
You don't have some test on it.
Sure I do.
I think you're supposed to read it.
No, it's
Sunk cost, page 10.
Page 10.
Yeah.
Some cost is a cost.
Sunk cost is a cost, and then you got four answers.
Which is the right one?
is incurred in the current period which remains constant even through activity changes, incurred in the past that is not relevant to future decisions, incurred in the current period which changes with changes of production activities, expected to be incurred in the future which is not relevant to the present decision. Remember the example I gave you, what's the sunk cost? You have tickets to go to the football game, but you decided to go someplace else.
No, you said hockey. No,
Instead of hockey. But you decided to go, that's a sunk cost. Read what a sunk cost is. What is opportunity cost? It's in your book. A cost which is directly traceable to a product, activity, or department is called a opportunity cost, fixed cost, direct cost, managerial cost. A cost which is directly traceable to a product, activity, or department.
Okay, a cost that's traceable.
That is directly traceable to a product, activity, or department. Opportunity cost, fixed cost, direct cost, managerial cost.
Definitely direct call.
Has to be a direct cost. You directly trace that cost. Okay? Which of the following costs should a manager not be evaluated for? You're the boss, and you're evaluating a manager who works for you. Which of the following costs should a manager not be evaluated? Fixed costs, variable costs, opportunity costs, non-controllable costs.
Fixed.
Fixed cost.
No, not controllable cost. Sounds a lot better. That's not.
Non-controllable costs, they can't, yeah, that's what you gotta do. So, up here, I think I got non-controllable costs, page 11. Okay, let me give you some more here. Which of the following is a period cost? What is a period cost? It's expensed in the year incurred, right? It's not added on. Period cost.
Repeat that.
Period cost, it's not added on. It's incurred in the time period which it occurs. Janitorial cost of a corporate office. Indirect labor. Indirect labor is part of overhead. Is it overhead added as we go from department to department? Rent on factory machines, isn't that part of overhead? Maintenance on production equipment, wouldn't that be part of overhead? Which of the following is a period cost? It means it's gonna be expensed immediately. Janitorial cost of a corporate office. See the keyword corporate office? If this was janitorial cost of factory, it would be a what? Overhead. Remember, sales and administrative expenses are expensed in the time period. So where are the administrative expenses? Corporate offices, right? Which of the following does not appear on the balance sheet? Does not appear on the balance sheet. That one I went over in your book. I know I went over that. The balance sheet I went over in your book in chapter 2.
No, you just said we should know it.
Yeah, okay. Cost of goods manufactured, finished goods inventory, work in process inventory, raw materials inventory.
You repeat those last.
Which of the following accounts do not appear on the balance sheet? Go in your book on page,
What question number are we on?
okay, on page 43, balance sheet. Okay, page 43, balance sheet. Which of the following is not, oh, I don't know out of that one. Good question, that one. Which of the following accounts does not appear on the balance sheet? Finished goods inventory. See, finished goods?
Yeah.
Work in process.
Yep.
Raw materials.
Yep.
Cost of goods manufactured. Where's that found? On the income statement. Cost of goods manufactured, go to page 45. Cost of goods manufactured. See that, page 45? Is the amount transferred from work in process inventory to finished goods inventory during the period. Is transferred to raw materials inventory account.
Wait, can you? we lost
Cost of goods manufactured is always equal to the cost of goods sold. Is equal to beginning work in process inventory plus the current period's manufacturing cost plus the ending work in process inventory. Can't be plus the ending out, it's always subtracting work in process inventory. Is the amount transferred from working process inventory to finished goods inventory. Isn't that the cost of goods sold? Because on page 45, the cost of goods manufactured is, see the last one, cost of goods manufactured, the 1,790,000
So.
is the amount transferred from work in process inventory to finished goods,
So
right?
are these like two separate questions? Cause
No, it's the same question.
I'm finna say, okay. It's just like, I didn't know where you're going.
the cost of goods manufactured, is the amount transferred from the work in process inventory.
To the finished goods. That's what you do in the calculation for the cost of goods sold. Product cost. Become an expense in the period the costs are incurred. Product. Are also called period costs. Are considered assets until the finished goods are sold. All the answers are correct. Well, how could be a period cost and a product cost be the same? They're not. So it can't be that one. Are considered assets until the finished goods are sold. Product cost, don't we add the product cost, what it costs to make the item over and over and over? A period cost is a cost which we expense immediately. Okay? Administrative expenses,
What's considered an asset until the product is sold?
considered an asset for the product is sold. Westinghouse manufactures refrigerators. Which of the following item is most likely considered an indirect material cost for Westinghouse? Indirect material. What is indirect? Page 39, it's what? Overhead, right? Gasoline cost of trucks used to deliver products to customers. Glass shelves for a refrigerator. Refrigerators, motors. Supplies used by factory janitors. Westinghouse manufactures refrigerators. Okay, so what are they making? A refrigerator.
Refrigerators.
What's in a refrigerator?
The shelves are, the motor is, so it's gotta be like the gas or the janitorial one?
Janitor.
Cost of, gasoline cost of trucks used to deliver the product to the customer. Glass shelves for the refrigerator, refrigerator motors, supplies used by the factory janitors.
It's gotta be
So the
supplies
gas.
for factory janitorial.
Yeah,
Oh.
it's nothing to do with the refrigerator. That's an indirect cost, right?
You said the janitor?
Janitorial service, sure. Which of the following is a manufacturing cost? Go to page 45. Administrative expense. Cost of supplies used by sales personnel. Indirect factory labor. Product advertising cost. Which of the following is a manufacturing cost? Administrative expense, that's a period cost, right? Cost of supplies used by sales personnel. Sales personnel.
So it's already being.
Indirect factory labor.
Yes.
Product advertising cost. It has to be part of the work in process.
So it's the factory labor.
Yes. Oh, these are so simple problems.
Yeah,
They said that for
Very-
years. I will hope it.
I get that problem.
Great.
Here's the problem.
I'm recording this, so if I'll make a Dropbox if anyone wants this.
That sounds good.
Just wait. I'll get your email in there.
Just like you basically have in, the exercise we just did in chapter 3, 17, exercise, what was it, 17?
Hopefully it comes out
The easy
okay.
one or the crazy one?
That was the easy one.
Okay.
Either that or God, that's not how these work.
It's not that.
Okay, here, listen to this one, I mean, you fix this one, you're silly. Department A has no beginning inventory. The department added direct materials, which cost $55,040, added direct materials, and conversion costs, that's labor and overhead, of $88,660 during the month of July. Had nothing to begin with. So these were the costs that were added in the month of July. Materials are added at the beginning of the process, and conversion costs are added evenly throughout the process as we go along. During the month, 40,000 units were completed. At the end of July, 3,000 units remained, which were 10% completed with respect to conversion cost. Which of the following is a correct cost per equivalent units for materials?
You said there was 3,000 units left at the end of the month?
Okay, listen to the question. Go over it again.
Doesn't matter.
Department A has no beginning inventory. Department added direct materials costing $55,040 and conversion costs, which is labor and overhead, of $88,660. Materials were $55,040. Labor and overhead is $88,600. Materials are added at the beginning of the process, and conversion costs are added throughout the process. During the month, 40,000 units were completed. At the end of the month, 3,000 units remain that were 10% complete with respect to conversion costs. Which one of the following is correct cost per equivalent units for materials? For materials. Anything that's in this question involving conversion cost, you don't even have to think about. You only have to calculate what is the cost per unit for materials. The company added direct materials of $55,040. Okay? Materials are added beginning at the conversion. During the month, 40,000 units were completed. If there are 40,000 units completed and the cost was $55,040 for materials, divide 40,000 to 55,040 and that gives your equivalent units. Who cares about the conversion cost? The question's not asking you about what the labor and overhead is. They're asking you what is the material. And it's 100% right at the beginning, they tell you that. So you just take the cost of the materials divided by the number of units produced to give you the equivalent cost for materials. Doesn't matter.
Yeah, it is, 'cause I do it backwards in my head at times. So it'll be 40,000 divided by your 55,000, whatever.
Very similar to what what said in the problem here. Here's another one. Company A uses processing cost. Its mixing department incurs conversion cost of $650,820 in the month of January. At the beginning, the work in process inventory of $30,430 for conversion cost. 54,000 units were transferred out of the department. At the end, the inventory consists of 2,500 units that are 20% complete with respect to conversion cost. What is the conversion cost per unit? You don't care about what? The materials.
Materials.
You only worry about the conversion cost. Just like we did in the problem. Like we did here.
Oh, you lost me.
I don't see that fast. You figure it out.
Look,
I don't think we can figure it out.
How many like math equations are there on the test?
5.
Oops.
Don't make it
How
more
many
difficult in your mind than they
equations are
really
there?
are.
So there's one question about mixing department.
Yeah. That's basically it.
how relevant is this in not manufacturing?
Assembly or non-manufacturing? I don't know, depending upon where you work.
Because, like, I mean, isn't that how America is now? Like, the majority of the jobs aren't in manufacturing. It's like more service-based, more things are going to service-based.
No, the opposite. It's all manufacturing, light manufacturing. We no longer have the heavy steel mill in manufacturing. We have technology, electronic manufacturing. Majority of jobs are in manufacturing in the United States. Assembly manufacturing.